All right, just let everybody know. Don't let us just listen to this and not do it. Thank you so much, Ms. Jen, for helping with the recording. So, guys, let's all let people know that we're live so that people can really jump on this call right now. So, I'm quickly gonna just take the first part of this call and share my screen quickly. If you can see my screen, just put some. I was gonna say put the number ones in the chat box, but I can check it from here myself to make sure I can see the screen myself. Yeah. So we have here what are the main Forex time frames, intermediate Forex training, hashtag Kairos Empire. Guys, I want you to put it in the chat box, hashtag Kairos Empire. All right. Each and every single person on this call, you are owning your Kairos moment. All right. So put it in the chat box, hashtag Kairos Empire. It is very important for you to do so. I want to make sure you are a proud Kairos member in this team. Let's go. Perfect. Now, today's training is going to be exclusive. All right, guys, it's going to be exclusive. Clifford of all people today, I have slice too. Miss Jen, I got slice today too, all right? So that means this is important to me that you catch this. All right, guys, so first of all, if you received the video from me, then you have to understand that, you guys already got the whole idea of what this is. So grab your pen and then your book, and then, let's go into the explanation real quick. All right, perfect. So what are the main Forex time frames? Now, the first one I'm going to talk about here is a long term called the position trading. So as I said earlier, when it comes to long-term trading or when it comes to position trading, that is where you look at your weekly time frame. All right. If you understand this, should I say sentence? What is this? If you understand this context, long-term position trading, weekly time frame. So the long-term is a classification. All right, the position trading is a type of trading, and then the time that you have to check is the weekly time frame. If you understand this, kindly put the number ones in the chat box before I explain. All right, so long term basically just means long term. Position trading is a type of a trader you will be if you take your entries from weekly. Now, position trading is a common trading strategy where an individual holds a position in a security for a long period of time. Now, the reason why there is a security there is because of safety. Position traders see movement to be like, hey, you know what? I might not really get all the time, so I'm gonna quickly just check the trades from a higher time frame and stay in for a longer time period. All right. So typically, over a number of months or years. So if you say that you were a position trader, what normally you are saying you do is you stay in trades for months, weeks, months, years. Now, position traders ignore short-term price. They didn't say they sometimes want to trade, they typically just ignore short-term price movement in favor of pinpointing and profiting from a longer-term trends. Now, it doesn't mean that position traders don't see moves. They see movement. They just ignore them. All right? All right, guys. Thank you so much for putting the Kairos Empire. That is beautiful. Now, position trading strategies and techniques. Okay? Position traders tend to use fundamental and technical analysis to evaluate potential price trends within the market. All right. So the part where it says that here are a few position trading techniques, I didn't put it there because I just want you to write it down. Now, this is what normally, position traders do. I'm going to quickly just go here quickly. This one. This is a position trading. All right. So this is where, as you can see over here, yeah, you guys can see my screen. Let's just say from here to here is a trend. From here to here is an upward trend, right? So where do you guys think, I'm going to ask a question real quick. This is A and this is B. Where do you think that a position trader will take their entry from? Here, point A, point B. Point A. Okay. I see A. Perfect, guys. No. A position trader, you don't have to take your trade from point B. No, guys. Because if you take it from here to here, it's a short term. They take it from the lowest point, the lowest point. If it's a buy, they are looking for point A, or so you can see this is the trend. So you take it from the beginning of the trend. They take it from the beginning of the trend. And mostly write this down. Position traders normally look into stuff like indices. They look into stuff like, commodities. So they capture their profit from longer term trending moves. So position traders normally move with a trend, okay? So now, if you are a position trader, all that you are trying to do is very simple. You just want to look for the highest or the lowest point and move with a trend. Now, because this is not really complicated. Don't think that, oh, if I'm a position trader, what does it mean by, now the weekly time frame is the most important. Now this lets you understand. Now, I did it this 3 ways so that you will get it. All right, guys, so pay attention quickly. Why I just break it down a little bit. Here is a long term, so that you will understand the attitude behind it. This is there, like it's a long term, so that you understand the attitude that you have to put in to be a position trader. The long term, you have to understand the attitude behind it, meaning you have to be patient. What kind of a trader you are? You are being honest to yourself that you are a position trader. So you are into position trading, cool beans. Weekly time frame. That is where, so you can actually mostly do your analysis from weekly, monthly, and daily. If you are a position trader, it's okay for you to do that because you want to be able to know how it's going. Now, when we say the weekly time frame, any time frame that you will see me talking about in here is for trend. It's for trend. I will explain that quickly. Now, this is for the position trading. If this makes sense, it doesn't matter whether the kind of trader you are, but if this makes sense to you, let me just know in the chat box. Put it number ones or say it makes sense. Whichever way, I'm cool with it. Either number ones or it makes sense, all right? Now, medium term, swing trading, daily. Now, this also is for the trend. So you look at your chart from the daily, okay? And then medium term is the type of, the classification, and the swing trading is who you are. So swing trading is a strategy that focuses on taking smaller gains in short-term trends. Now, this does not also mean that it's not a trend. This is just a short-term trend and cutting losses quicker. Now, there are some key points over here that I really want you guys to write it down so that you will understand. Swing trading is a strategy. All these things we are talking about, they are strategies. Sometimes you get people coming in here talking about what strategy do you use, and they are expecting MACD. They are expecting moving averages. That is just indicators. This is a strategy. Guys, if you are getting this right now, because I really want it to be very simple, just let me know, just be more interactive in the chat box so that I will know that you are really getting this. Strategies is not like, you get people saying, oh, what strategy do you use? People go, I use fibs, those are just indicators. They are just indicators, all right? So at the end of the day, one thing that you have to understand is that this is a type of a strategy that focuses on taking smaller gains in short-term trends and cutting losses quicker. That part is very important to me. You have to know how to cut your losses quicker. Guys, it is okay to lose. It is okay for you to lose. Hold on, give me 1 second, guys. All right, just wanted to make sure I could be able to have okay. So if it is making sense, it is okay for you to be able to lose in the game. Now get this straight. See yourself to be like a boxer, all right? Now, if you go into the ring and you are a boxer, it doesn't mean that you won't get a punch. But the goal is for you to be able to stay in the 12 rounds and either get a knockout, or is either you don't get knockouts or you knock somebody out. That is your goal, but it doesn't mean that you won't get a punch. That is the same thing when it comes to trading. It doesn't mean that you won't lose, but the goal is for you to be able, exactly, the goal is for you to be able to make sure, this is a loss. I'm going to take it quickly before I lose more. So smaller gains in short-term trends and cutting losses quicker. It's very important that you get that part. The gains might be smaller, but done consistently over time, they can compound into excellent annual returns. If you put your money in the bank, they multiply it. They multiply it into thousands and thousands of profit. They give you nothing. If you ask for an interest, the maximum I've heard is like 3%. Even that one, I don't know. So you are here to compound your money annually. I know some people who, put in an investment and then you could see that the whole year they made 5% and they're like, whoa, I'm going to become successful in the future. And we have people over here that can make 5% in a week and they're like, nah. I get people asking me questions like, why is it that Shift don't send signals every day? What do you mean? Already Shift is providing over 600 pips, 300 pips, 200 pips. How many pips do you want before you know that you can become successful over here? So at the end of the day, you have to understand that this is a type of a strategy. It's very important. So the gains might be smaller, yes, but done consistently over time, they can compound into an excellent. Now, swing trading positions are usually held a few days to a couple of weeks. So maybe 1 week, 2 weeks is swing trading, all right? Maximum maybe a month, but can be held longer, more than a day, right? So guys, if the swing trading part is making sense, so this is a particular type of a strategy. So over here, it is a strategy. This is also a strategy. It's a trading strategy. All right, so put the number ones in the chat box if you're getting this. This is also a strategy. So you will be able to say, hey, I'm a busy person. I don't have all the time in the world. I actually really travel a lot. Well, be a position trader. Find a good trade, stay in for a longer time, come back after 6 months, know that you've made money. Now, if you are somebody that you get busy weekly, become a swing trader. So that is why I actually made you guys, did that whole task thing so that you will understand that if you put your life in that link and then you answer those questions, you will get to know who you are. Psychologically, that is a test. Now, let's go to this side. Now, this is very important to me as well. Short term, day trading, 4 hours, and then scalping 1 hour. So when you are a day trader, how do you implement risk management with swing trading? Perfect. Good question, guys. Thank you so much. So let's just say we're swing trading, all right? At the end of the day, when we talk about risk management, all right, when we talk about risk management and all these stuffs, now position trading, anytime that you hear about risk management, one thing you have to understand is that, first of all, the capital that you have, write this down. First of all, the capital. How much do you have? I have the same question for position trading. No problem. I'll explain everything. First of all, your capital. That is the first thing you have to write it down. Just notice this. Let me say it again. I didn't say the capital. I say your capital. All right, guys? Can you just write your capital in the chat box for me right now? Not like write that amount of money you have. Just write a sentence, your capital. I'm not saying write in the chat box how much you have, but your capital, just write it down. Perfect, your capital. I didn't say the capital. So how much do you have? So when you come and then you see, if you see a couple of people making money with some capital, it is not yours. So the attitude is not, their attitude is not your attitude. It's very important that you know that's your capital. So how much do you have? Now, the amount of money you have, what can it trade? That is why I said the 3 questions that I always keep on saying. Number 1 is how and what. Number 2, when. Number 3, when. When to get in and when to exit. Now you will find a lot of people, they know when to get in a trade. They spend years, let's say 2-3 years, and they know when to get in a trade, but they don't know when to get out. That is the problem. I said it on the previous training we had on Tuesday, that Some people knows how to use MT4, but they don't know how to trade on MT4. The same way some people know how. These are the three problems. Just write these things down and make sure you don't fall into none of those things. Number one, some people know how to use MT4, but they don't know how to trade on MT4. It's two different things. I explained it. Hopefully you got that. Now, secondly, we have some people that at the end of the day, what they normally do is they know when to enter a trade, but they don't know when to get out. It is not really that complicated, but that is the problem. They know when to get in a trade. They have focused all their life on when to get in a trade, that they don't even realize when to get out. Now, number three, there are some people who know when to trade, but they don't know when not to trade. These are the three things that if you are able to conquer them, you will make money consistently. They asked Warren Buffett that why is it that people don't learn from you how to make money? He said, because people don't want to learn how to make money slow. That is the problem for the majority of people in this world. How to use MT4, but don't know how to trade. Know how to use MT4, but don't know how to trade. Exactly. So I get it. No three again. Number three again. So the number three is people who know when to trade, but they don't know when not to trade. So they know when to trade. They know. They're like, okay, London session, New York session, they know all of that. But they don't know when not to trade. So sometimes maybe when they lose money in New York session and they get pissed, they just start trying to get their money back somewhere, some point. You know, so sometimes not knowing when, let me just stop checking the chat box. I was confused. Sometimes not knowing when not to trade is part of the game. That is why I said, see yourself to be like a boxer. Sometimes not going close to the opponent is part of the strategy. Guys, if you are getting this right now, I really want you to understand what a strategy is. Sometimes not going close to the opponent is part of the boxer strategy. But sometimes going close to the opponent is also part of the strategy. So the strategy is not only just what makes you make money. A strategy is also what protects your account. When you are not even trading, is part of your strategy. So somebody can call maybe missJ, hey missJ, what are you doing? Say, oh, nothing, I'm just chilling. You know, nothing, why are you not trading? Because I'm not, it's not time for me to trade. It's part of the strategy, all right? So now the risk management part is your capital. How much is it? What kind of pair can you trade? And then winning ratios. Now, there are some winning ratios that does not make sense. I have some, I have an encounter or an experience with somebody that took like 40 trades and then won 30 and lost 10. But he was still losing more than he was winning. Does it make sense? If it makes sense, if it doesn't make sense, put no in the chat box. He took 40 trades, won 30. He took 40 trades, won 30, and he was still losing. You guys, if you have been into that position before, put some number ones in the chat box. All right, if you've been in that position, put some number ones in the chat box. Like you take 40 trades, and then you have won 30, you've lost just 10, but your money is still nowhere. It's because your ratio is wrong. Your ratio is wrong. Like, thank you so much, Dr. Ken. Like, at the end of the day, it's so true. Your leveraging is wrong. It's like you over leverage on the wrong trades. And then you start to become very disciplined in the trades that, like, you know, that wins, but it's very small pips and everything is so small. And then you over leverage on the ones that you lost. So every time that it happens that way, everything just, you know, becomes very bad. So the first things first is your capital for the risk management. When it comes to long-term trading position, your capital is very important, because if your capital is good, and then if you put in a lot, that will not hurt your accounts. You can stay in for a long time, because over here you want to make more money. All right. So over here is very simple. Don't get it complicated. Your capital have to be good. I'm not going to mention a specific one because that is not really important. you know, but at the end of the day, it's common sense. You just have to know that, okay, fine. If I have this amount of money, which I can really put there, if I lose it or not, it's okay. Then you put it there, and then you use at least some reasonable loss size that nothing will happen to your account, pull back or not pull back, and then you stay in for a little bit while. So if the capital is lower, it's long-term trading advisable. When you say lower, are you talking about less than 1,000 or 1,000 somewhere around? Less than 1,000. Actually, trading anything less than 1,000, is not really okay. But you know, recently a lot of people don't have money, so things are hard. That is why every time an indicator will be advising you use 0.01, even if there was a little bit more lower than 0.01, I'm sure you know, indicators will be advising that. So it's because trading, you need to be able to be comfortable. Anytime, has anybody on this call be in a trade and you are not comfortable before? If you have been there before, put number ones in the chat box. Like you are in a trade and you are not comfortable. It's like you have to check it. You know what? How is it going? Oh my God! Like it's like when you are even eating, you can't. It means you know your account is not strong enough. That is the problem. If you are in a trade and you are not comfortable there, imagine if you have $5,000 and you put in 0.01. I'm sure you can travel 12 hours without even opening your MT4. Yes or yes. So it's like when your account is small. When your account is small, that is what happens. All right. So guys, when it comes to these risk management stuff, it's still the same thing wherever that you go. You just have to be able to, you know, understand that this is just a simple mathematics. You have 10, you take 1 out of it, it's okay. 9 is still remaining. If you have 10, you take 8 out of it. What is remaining? Just 2. So it is just a simple, you know, logic mathematics. That is all. So this strategy, we also get it. Now let's go to this part. Main differences between trading, between day trading and scalping. Now, when it comes to day trading, let's talk about scalping first. So we're going to do it like, you know, sideways, right? So the day trading, the trend line is 4 hours. The scalping, the trend line is 1 hour. So the day trading, you can check your entries from your trend line from 4 hours, and then look for your entry from 1 hour if you want. The scalping, your trend line can be 1 hour, and then you look for the entries from the 30, 15, 5 minutes, 1 minute, whichever way is scalping. Fixed short-term moves and positions. Scalping is fixed short-term moves and positions. Day trading is medium to long-term positions. Like it's like, you know, it is intraday kind of thing, like the whole 24 hours maximum kind of a thing. And then number 2 for scalping is mostly trend following. It's like, where is this going in the short term? I'll show everything in there. So let's just take a screenshot or write this down. I'll explain quickly very well. Now, number 3 is hold time from hours to days, hold time from a few seconds to minutes. Number 4, chart tick or arranging. So guys, just take a screenshot or write this down. Let's move on to the next slide. Okay. So now, is it okay? Can I move on to the next slide? If the screen, you can take a screenshot and then write it down later. All right. Can I go now? Can I move on to the next slide? Yes or yes? All right. Perfect. All right. Cool. So now let's talk about this a little bit. Now, this is the starting point. Now, this is what I mean. So guys, I want to ask some few questions from here. From this point to this point is what type of trading? From here to here is what type of trading? Long term, right? Exactly. It's a long-term trading. It's a long-term trading, long-term. All right. And then let's say from here, all right, to here is what type of trading? Or let's just say from here to here. From here to here is what type of trading? Yeah, it's a swing trading. Yeah, it's a swing trading. It's a swing trading. And then in between these areas is where, you know, people day trade or day scalp. In between these ones here, sometimes even some people can scalp or, day trade from here depending on the volatility. So this is it. So now at the end of the day, these things are your trend lines. You put a trend line here, it shows that it's going up until it breaks it this way. It is to the trend line. Now, this is a higher high, higher low. So if you are buying, you always buy from the higher low. That is all it means. So whenever that you are buying, write this down. When you are buying on a trend and it's a bullish movement, let's say a buying movement, you always buy from the higher low. So always buy from an uptrend into brackets from higher low. I don't know whichever way you're going to put it, but I hope it makes sense. Always buy. Like when it's, yeah, of course, the buy is there already. So always buy from a higher low. I don't think I need to talk about it, whether it's an uptrend or whatever, because a buy is there. Obviously, you are buying, so it's going up. That's what you're buying. So always buy from a higher low and always sell from a lower high. Always buy from a higher low and then always sell from a lower high. Exactly. So now from here to this point is a position trading depending on the time frame, and then you will buy from the starting point and take your profit from here, and then you will sell from this point and take your profit from here. All right, so it is just as simple as that. Now, this is a perfect example of what I wanted to show. So this is a bull trend, all right, and this is a bear trend. Bulls, bears. Now, range sideways is where normally people take their daily trading and scalping from. All right, so people day trade or scalp in the range sides, depending on the time frame. So that is when, if you want to go to the 5 minutes and 1 minute to scalp, then you will be scalping in between, because even if over here, if this is a 5 minutes candlestick, I think I'm going to quickly share. Oh, no problem. I think this makes sense. Guys, if this really makes sense a little bit, just because today I just explained the time frames, nothing much more, and then we are almost done. So over here is a bull trend, right? And then you buy from here. As I said, you buy from here, because why don't you buy from here? You buy from here, this will scare you. So most people on this call, this is the problem. You always buy from here. You always buy from here. And then they pull back because you over leverage, you get out. And then if you're on this call and then you have gotten out of a trade and they went to where they were supposed to go to when you were in earlier, put number ones in the chat box. This is just a simple stuff. You don't have to worry your head. You see? So you always buy from here. And it is a wrong thing. You have to check where the market is. If it has already passed here, don't buy it. If it is here, don't buy it. Wait for the pullback and then buy it. So over here too, exactly, exit high. The EH, as you see, is exit high, exit low. So if you are here and then EH, you see this kind of point, you exit the high, meaning you exit buying. And if it drops here, you exit the selling. Come back here, exit the buying. So it's just that, lower lows, lower high, lower lows, lower high. That is all, guys. So basically, these are the three: long-term, medium-term, short-term, so on and so on. And then this explains it. So if you're a position trader, as I said earlier on, you have to understand that these are the strategies. These are the strategies. Now, the techniques, the position trading strategy. So when you choose the techniques and all that, is very simple. You just look at every single techniques or strategies or whatever, so on, supporting indicators and zone to zone areas on WOW and MineHub that you're going to be learning. Those ones, it helps to be able to trade all these time frames. The only difference is the returns. Position trading gives a lot of money. Swing trading is you're not looking to make a whole lot of money. You just want to compound bit by bit. Scalping, you go in, you out. You go in, you out. So if you don't understand scalping very well, just kindly just really understand it before you call yourself a scalper. Because as you can see here, number 6, the stress level is medium to high. You don't want no stress. And then the day trading, the stress level is low to medium. All right, trust me, guys. So sometimes people say I'm a scalper. I'm like, okay, all the best. All right, if you want to be a scalper, all the best. But you have to be ready for their stress to go high. So because it will go high. Okay. So all being said, this is the time frame we are going to do. We are not going to spend all the time, as I said. Yes, I know, right, Quinn? We can't kill ourselves. So, guys, all being said, if you understand the time frames now a little bit concerning why you should use them to trade, put some number ones in the chat box. The education material, so many things are there. And if you're in the Pipiton group already, amazing stuff is also coming into the team, preparing something huge for you guys so that, you know, things will be good. But Miss Jen is going to take it out from here. So, Quinn, if you're on the call, my job here is done. I'm going to pass it on to Quinn. Quinn, over to you.
Wow. Guys, can we get some flames in the chat for the king himself? The king himself. Like, he did an amazing job going through some incredible training, all right, on your position training, the time frames that you should use, guys. Wow. Cool. I'm not going to take too much of your time, but this is more so for those who are trading DAX. I wanted to really walk through today, do a recap of today and some of my thoughts of what's going to be going on in the market. And also how going forward, for those of you who are in the people fund, we're in week 2 of the people fund. No, sorry, we're in week 3. Oh my God. I want to walk through how we're going to go forward. You know, it's come to our attention, you know, that people are missing trades, or maybe not, they're going in entry wise, good entry points, or there seems to be, 1 second, I just want to make sure the light is closer to my face. There seems to be, I don't know, there seems to be something happening in the Pipiton group when it comes to trading DAX, although, you know, yeah, so what we think is a good solution is this. We want to ensure that people are comfortable reading the charts. It's not just about waiting for a signal to come. You know, we've always said that the goal is to ensure that everyone, whether you're in the Pipiton or not, but the goal is for you to become independent, consistent, profitable traders. That's the goal. So I think that going forward, right, instead of sending a signal to say buy now or sell now, what we're going to do is start sending you our markups and say the areas of interest. Okay, so like the zones in which we're trying to look for in terms of when we're going to go in for a buy or when we're going to go in for a sell. So then it's on you to take onus on that trade and decide whether you believe it's in the zone of a sell or zone of the buy. So I'm going to go through an example of this, okay? And I'm going to walk through some of my thoughts and walk through some of the sentiments around that and what's been happening in the market and why I called a sell and what's essentially kind of went down in the marketplace, okay? If my computer will corroborate with me. Gosh. All right, 1 sec. So let me share my screen. Okay, so how do you get into the Pipiton? What group are we talking about? Pipiton or intermediate? Which group are we talking about? Okay, so if you guys can see my screen, let me know. You know, weird loading sign. Perfect. Okay, so All right, let me just get DAX open. All right. What a beauty. What a beauty. My God. Oh my God. All right. So this is DAX. And as you can see, it completely smashed our target and it just kept on going. It was just like, if you've ever been like to the fun fair, if you've ever been to the fun fair where you go on one of those rides that has that massive drop, like you go all the way to the top and then you go shoo. That's what DAX did today. It was decided that, okay, we've reached a height, you know, that was pre-COVID conditions. So it's high. So the idea to keep buying, I said this in the morning daily bread call this morning. The idea to keep buying is highly unlikely because it's reached a peak, which was pre-COVID conditions, which was the highest that DAX has ever been. Is in the zone of where the price of where DAX is the highest that DAX has ever reached. So there was going to be a reversal. There was going to be a downfall, you know. And in the morning we saw head and shoulders. Yes, it didn't form when I sent the signal, but it came back to entry, and my oh my, did it form, you know. And as you can see from this, it more than formed. So why am I showing you this? Because I want to talk about how going forward we're going to send screenshots. So what I'm going to do going forward is this. Say for example, I have this trade idea that I want to send out. Okay, I'm going to say to you, ladies and gents, that let me clear this. I'm going to say to you, cool, at this blue line, and then put another line. Okay, cool. So I might say to you that, cool, at the blue line, I'm looking to sell. You know, if it breaks and then tries to retest, I'm going to look to sell at the top of that blue line. All right. You know, so breaks, retest, I'm going to sell at the top of that blue line. Okay. Or if it's, say if it's going the opposite direction and wants to buy, you know, if it breaks and retest, I'm going to be buying at the bottom of that green line, right? I'm going to be sending this as an, I'm just walking through an example. Right now I'm looking at DAX, all right, which is an index, the German Stock Exchange Index, which essentially is a performance of the top 30 German stocks that trade on German Stock Exchange. It's a track of that, okay, price of that. So what I'm showcasing in the Pipathon, right, we have, we're in a boot camp, a 90-day trading boot camp, and part of which we are trading DAX. Now, originally I sent out signals. Some of them hit stop loss, some of them hit take profits. But I want to ensure and encourage that people are actually looking at the charts, and people are actually making conscious decisions as to whether they're going to go into a trade or not. Because like I said, the goal is not to create dependent traders. The goal is to create traders who are profitable and know what they're doing. And how you get there is by making your own calls. So what I'm going to do going forward is send prompts. Instead of sending a full out signal, okay, so Merveth, I've answered the question. So what we were being traded is DAX 30, which is a German Stock Exchange Index. Okay, cool. So instead of just sending the signal straight, what we'll do is send a screenshot, and we'll say, cool, area of interest in terms of possible sell area and possible buy areas. Now, the training that you're doing on zone to zone, you see where we're going with this. Those of you who are in the Pipathon group, you know you have some homework to do in terms of watching and learning about zone to zone training, right? Yeah, you see where I'm going to this. Okay, cool. That zone to zone principle can be applied to all of these pairs. So guess what we're going to be doing going forward? Instead of sending signals direct, like buy this, sell now, we're going to show you zones where we think, okay, this is, if it breaks this zone, it will be a buy. If it breaks this zone, it will be a sell. And you have to wait and watch yourself and determine whether you're going to go into the trade yourself. All right, so that's how we're going to be doing it moving forward. But in the meantime, I'm going to walk through my assessment of DAX and my thoughts about what I think has caused this amazing, wonderful, fantabulous sell that we see on DAX. You know, people retired today. People bought a house today. People made enough to actually pay off their mortgage today. I'm not kidding you. This one move was life-changing. Like, some people have just said to their boss, I quit. Like, receive it. One day it will be your story. Like, receive it. But yes, going into the charts, let's go through this. So how I like to mark up charts, I'm just gonna delete this. So I'm gonna walk through my markup on this, all right? I'm gonna just delete everything for now and walk through this markup right now. Receive it. All right, so with that, I always like to start off with the month and work my way down, okay? I always like to start on the higher time frames and work my way down. Now, on the higher time frames, as you can see, we've got a lot of wick action here, but ultimately price reached its highest peak pre-COVID conditions. So the beginning of the year, January, February times, right? February, it reached its highest peak before it started falling. Now, where we are this month, okay, we were close. You know, we were really close to that area, the green line. We hit that green line. We were really close to that blue line, which is the highest point in recorded history of DAX, right? And I said, based on the sentiment in the market, based on what's been happening in terms of we're being in a pandemic, it's highly unlikely price is ready to climb even more and that we should be looking for sells. So that is what I got from the month, all right? Now, if I go into the daily chart, right? So before this big wick formed, before this big red candle formed, we had a strong zigzag. So just like the structures that Cliff went through, you know, you've got the upward move, the retracement, the upward move, the retracement, the upward move. So what comes next? What would we expect? Had this, imagine if this red candle wasn't here. If it's made it, if it's trending up, but it's going up, retrace, what comes next? Exactly, the retracement, right? The retracement, exactly. So that's exactly what we was expecting. We were expecting there to be a pullback. We were expecting there to be a retracement. And oh, did it not disappoint? Hey, these are the kind of days here when you know that God, there is a God somewhere. All right, so cool, you're looking for that retracement. Cool. So then if I now go into the lower time frames, all right, I want to see if it corroborates with my thoughts that there's going to be a retracement. So I'll go into the 4 hour. And you just got to remember that this red candle didn't form, all right? Okay, so on the 4 hour, again, you know, you've got that zigzag. Okay, so you think it's going to come down a little bit and maybe go up again, right? So we see that on the 4 hour as well. Okay, now if we go into the 30-minute, again, you see the same move. However, what I saw this morning that made me think that this is going to sell was this. on the 4 hour. All right, so it looked like it was forming a head and shoulders. In fact, I think I've put it in the group anyways. So it looked like it was going to form a head and shoulders. And then what does a head and shoulder indicate, guys? What pattern, what we're looking for in a head and shoulders? Any guesses? What are we looking for? Okay, fantastic, a sell. We're looking to sell on a head and shoulders, right? So we're looking to sell. Oh, sorry, it was here, wasn't it? It wasn't this. This is what caught us out. So the head and shoulders that we saw was this. Oh. Right, that was the head and shoulders. So we anticipated that it was gonna fall like this. Okay. Lower high, because we're selling. Okay, cool. So that was the head and shoulders that we were expecting. Now, yes, it climbed. Yes, it may have hit some people's stop losses. However, as I said in the morning call, it was still going to sell. It was just about knowing when to sell. Now, how I would have anticipated the sell is a zigzag down. Now, look at this beauty. Look at this beauty. 1 step, 2 steps. You're trying to catch the 3rd step, right? Go back to the training when I talk about DAX. It worked out perfectly. Entry at the top of the 2nd step to what? Capture the 3rd step. And what a step it was. Let me show that again so that everyone gets it. 1 step, 2 step, 3rd step. And the goal when you're going in for zigzags is what? To catch the 2nd step. Sorry, to catch the 3rd step. So you're going at the top of the 2nd step and you go in for a sell. If this is clear in terms of the zigzag down, can I please get some number 2s in the group chat? Fantastic. If it's not clear, let me know. Cool. So, great. See, these patterns in DAX, they repeat themselves all the time. They work. Hence why, okay, not clear, right? So one of the patterns that we look for when we're trading DAX is zigzag up and down. What a zigzag is essentially it consists of a leg, which is like a downtrend, let's say, some consolidation, which is like your step, and then move again, right? So I call this a zigzag. Some people call it staggered steps, you know, I call it zigzag, okay? So the goal with zigzags, all right, let me draw it properly. Now the goal of a zigzag, okay, is to catch the 3rd step. Okay, so catch this 3rd step. How? By entering at the top of the 2nd step, okay, to capture the 3rd step. So when you're selling, you enter the top of the step. When you are buying, so if it zigzags up, so imagine if it zigzags up like this, you're gonna go in at the base of the 2nd step. You want to enter at the base of the 2nd step. And the goal is to capture the 3rd step. If you catch from first step, fantastic, sniper entry. For me, I always just go in for the second step because you just don't know whether it's a retracement or if it is a beginning of a zigzag. So that's why I just keep it safe to the second step. But if you see it from the first step and you go in, fantastic, wonderful. All right. Okay. Now, what drove this? Some of you may be questioning, why? Why now, DAX? What is this? why did it sell and just keep selling? So the goal for a zigzag, you know, when a zigzag is broken, if price retraces back past the previous step. So imagine, you know, you've gone in for a zigzag like so, right? And you entered here, right? And then price decides to do this. Oh, it dropped, ooh, and then it just went back and past the previous step. Then the zigzag is broken. But what price could do, all right, it can retrace and then drop, okay? That's why, unless it passes this previous step, the zigzag is still in play. I hope that makes sense. If that makes sense, can I get some number 2s, number 3s, something to say that it makes sense? Cool, perfect. So if you catch it first or second or third step, what will be a good TP? Now, for me, when DAX is free falling or skyrocketing like this, right? I use the zones, which if you are doing your homework, you will know how to mark up your zones, right? I will look for the zones. Once it passes a zone, guess where my stop loss goes? Yes, at that zone. And I just trail my stop loss until the ride is over. Okay. Yeah. So, couple things I wanted to talk about. So what is going on? Why is it that, you know, price is doing this? First of all, do you all remember the training I did a couple weeks ago around the weekly market structures? Who remembers that training? Who was on that training about weekly market structures? I'm going to quickly go through it again. But essentially, high level, okay, perfect. So if you was on it, can you remember what happens on the Monday to Friday? What tends to happen? Who can recall? Putting people on the test out. Let's see if people remember. Okay, Monday fake out, cool. All right, so let's see if we can find this. So Monday fake out. All right, so I'm gonna go to Monday on the chart. Let's see what happens on Monday. All right, so Monday was what, the 31st? Okay, cool. So 31st is here, all right? All right, so 31st is here. Let me just put a line to mark the 31st, all right? So this candle is the 31st candle, right? Now that's Monday. So it looked like it was going up, but then guess what happened? So you're thinking, oh, it's an uptrend. I'm on an hour chart. Let me go down to a lower chart. Maybe that will be helpful. Let's go down to a minute. Okay. All right, so the day started on Monday going uptrend. You're thinking, wonderful, it's going up. And then boom, started selling out, fake out. right? So that happened. So yeah, tick, Monday happened. What happens on a Tuesday? Tuesday's reversal. Okay, let's see what happened in the chart. So let me get another vertical line for Tuesday, 28th. Oh no, 31st. Okay, 1st of September. All right, so this is Tuesday. What happened Tuesday? Reversal. Okay. So Tuesday, let me get another. All right. So on the Monday, it was looking like it was going up. Oh. It looked like it was going up, and then it started trending down. Cool. Then on the Tuesday, it went up. Before it dropped, but even when it dropped, it came back up and ended on a high. All right. So then what happens Wednesday? Wednesday, Thursday, midweek reversal. Okay, let's see what happened on Wednesday, Thursday. So Wednesday is continuation, Thursday is reversal, Friday touches, Thursday high or low, right? So Wednesday, what happened? It continued the upward move. Right, let me get another. So we know that there's going to be a midweek reversal. So Wednesday continued the move up, okay? So Wednesday continued to move up. So Thursday, there's going to be what? A reversal. So what were we expecting? If it was uptrending on Wednesday, today we were expecting that midweek reversal, and lo, did it play out, okay? So the Friday, with this, just looking at market structure, right? Friday, what are we expecting? Tomorrow, what are we expecting? That is either going to go where? Two areas that price may go to. I can see people want to draw. Two areas. Thursday's high or low of the day. Fantastic. All right. Someone is really trying to draw, but you will not win. So price is either going to go right back up to where it was, or it's going to drop further to the lowest point. Okay. So here are my thoughts. Now tomorrow, what is so important about tomorrow? What is happening tomorrow that makes us think, "Ooh, we've got to be on high alert"? Anyone? Any guesses? NFP. Ding, 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 ding. NFP. So let me get it in the. Let me go to the website. What website is called again? I think it's called Forex Factory. That's it. God, my mind just went a bit blank. Sorry. I do actually use this. So when I go into the Forex Factory, right, check the calendar for tomorrow. All right. And look at all those reds. Beautiful, beautiful, beautiful too. Now, every single first Friday of the month, you know, we're in a new month of September, we have what we call NFP, which is non-farm employment, non-farm payment, like, okay, payroll, sorry. Oh God, can I speak? Non-farm payroll, all right? Now, what is this? Let me show you. Now, if you are on this website, Forex Factory, and you don't know what a piece of news is, really cool. There's this button next to the piece of news that you can expand, and it gives you a whole kind of high level, you know, summary of what it is. So you've got that here just to be, you know, useful. But essentially what it is, it shows the employment number, the employment change, that excluding farming, but the employment change in the country of the US. Right? So whether employment has increased or decreased, this is a good indicator, right? Now, if employment falls, what do you expect will happen to price? If employment falls, what do we expect will happen to price? So if the number of people okay, got a bit of a mixed bag. It's a bit of a mixed bag. So let me explain it in layman terms. If the number of people in a country employed drops, that means people are not working. So if people are not working, what happens to the country? Is it good for the country or is it bad for the country if more and more people cannot work? It's bad. So if it's bad for the country, what would that do to the price? It will drop, okay? Yeah. So guys, when you're thinking about news and the sentiment of news, just think about it break it down. Think about it in terms that is relative to yourself, all right? So if people can't work, that means they can't buy things. If they're not buying things, that means there's no money in circulation. Therefore, GDP is affected. Therefore, the country's rubbish, and therefore they go into recession. All right. Now, if employment is high, okay, if employment is greater, what do we think is going to happen to price? It will rise. Fantastic. Exactly. So this is a massive major indicator. And in fact, a lot of the employment news all comes out at the same time every first Friday of the month. Hence why it's such a well-known documented date in the Forex calendar, because every first Friday of the month we see this huge news. And why is it so big? Because the USD currency is the highest pegged currency. Is that the word I want to look for? It's the currency that's mostly pegged with most of the other currencies in Forex pairs, okay? So meaning that it has a profound impact on the Forex market as a whole. So you're gonna see it impact things like gold. Gold is gonna be on my watch list tomorrow, right? You're gonna see it impact Dow and US 30, and you're gonna see it impact DAX as well, and all of these indices. You're going to see it impact all of the currency pairs. So if you went on to let's go. If you went on to the index of the pound, okay. Right, you're going to see that it's going to impact. It's going to impact the pound dollar index. So you can choose which currency pair you want to trade off of this, right? So what are my thoughts about NFP? Now, there's a lot of things happening in the US right now that we're going to see a huge momentum, right? We already saw it today. If I go into oh, this is not what I need. Sorry. Okay, so if I go into Dow, we saw the same drop as you did in DAX, but I'm just going to focus on the Dow right now. Now, a couple of things that are happening. Elections. There are the primaries that are happening in the US market. Why is this important? I'm literally going to be 5 more minutes. Why is this important? Because sentiments drive a lot of what happens in the market. Technical analysis is like the technical structures, like, the market structures that we went through. Fundamental is around news, and then sentiments is how people feel, right? So right now it's political season. So sentiments is going to be very much in the driving seat when it comes to determining how price moves. And one of the interesting things is that, you know, during these periods of volatility or periods of high sentiments, you see a move, right? And where do you see the move? You see a move of people, of traders moving themselves out of positions of higher risk, let's say, to what we call safe havens, all right? You will see it move. So what I'm anticipating, and I'm not a mind reader, I cannot tell the future, but what I'm anticipating, just based on that sentiment, right, is that things like gold, we shall see rise. Okay, my chart's a bit messy, sorry guys. As you can see, I've been enjoying the good, but with gold, I'm expecting this to rise. Whether it happens tomorrow or next week, I am expecting gold to some point make its way up based on just that sentiment alone. You know, right now, risk on, risk off indicators, so things that you know, funds or things that bankers would tend to say, okay, cool, I want to move my position into a more safer haven, or no, I'm happy to hold on to this risk and hedge my risk. Things that tend to sway traders to stay in one area or not is pushing people into safe havens. Why? Because of this sentimental environment that we're in right now, in terms of politics, what's going on in politics, what's going on in terms of economic indicators, what's going on in terms of, you know, the world events as well. So it's not going to be a surprise if we see price on gold fly, and in the offset see price in stocks, so indices that measure the index of stocks, so like Dow and US 30 and DAX, see those fall. And that's what we've seen. We've seen the fall in DAX today. And I think a lot of that is driven by this sentiment, right? So do I think DAX may continue to fall? It's very likely. It's very likely. Just gonna remove these. It's very likely that DAX may continue to fall. In fact, it could potentially fall, you know, to this area, and maybe even this area, potentially. Who knows? Who knows? This could be the beginning. I don't know if you record the market structure slide that Cliff went through. This could be the beginning of the reverse. So it went up, now it's going to go down, potentially. Who knows? We can see what happens tomorrow. So to sum up, okay, because I know I've been speaking a lot for too long. Sentiments in the market, everything is kind of indicating that, for example, if Trump wins the primary, then you may not see much move. But if, say, for example, Biden wins, then, you know, a lot of people will not know what kind of leadership Biden is going to come in with. So therefore, you will see a massive rush into safer havens, because you don't know what a new political party's regiment is going to do to an environment, in terms of the finance environment. So people move into safe havens like gold. So you will see gold rise. You will see stocks, indices fall like we did today. And with news coupled in there tomorrow as well, it's going to be a very interesting day. I'm going to have my eye on it. It's not something I'm going to be trading with people on, but intermediate group, we definitely will have a look at that, see what goes on with NFP tomorrow. Put an alarm on. You know, for those of you who have never traded before, I encourage you to do it in demo, because if you can figure out how to manage news, you will make money. So definitely trade it in demo. Join us in demo. I think that would be a really good shout. Yeah, so going forward for the Pipathon, we're going to be sending out trade ideas of areas of where you're going to go in for sell, areas and zones where you're going for buy, you know, and you watch it and see whether it's ready for buy or a sell. Of course, we will be there to guide you as well. Okay, that was it from me. That was it from me. Guys, well done for being on this call for so long. That was it. That's all I wanted to talk about today. Are there any questions before I end the call? Oh, you're welcome. You're very welcome. Any questions? I can do that. Pending orders, yeah, you can, yeah, feel free to use pending orders. I really don't like using pending orders with DAX, but you're welcome, you're welcome. What's the best time to trade NFP? So when is NFP tomorrow? You will, how do you calculate pips and DAX? All right, so when is NFP tomorrow? NFP is at I was gonna say 1:30, but it's actually 12:30. Could have thought it was 1:30. Yes, it is 1:30. My time is wrong. Yeah, so NFP is at 1:30 p.m. London time. Okay, 1:30 p.m. London time. When is that for? All right, I'm really bad at converting in my head, so I think people can figure it out. 1:30 p.m. London time is when NFP is going to be coming out tomorrow. So that will be the time that I'll be trading NFP. Question 2:30. Thank you. How do you calculate pips? How do I calculate pips in DAX? It is literally like counting whole numbers. So if I was on 1,000 and then I go up by 1,010, then I've made 10 pips. How do you join the groups you spoke about? Okay. So the Pipathon group, we're already in week 3 of our 90-day game plan. So we will be launching another phase in the near future. So keep an eye out for that. But for those of you who want to if you're not in the intermediate group already, for those of you who want to get yourself from the beginners group into the intermediate group, it's very simple. You have to complete the checklist. So you have to complete the beginners trading course, the Forex beginners trading course, and the basic masterclass courses on WoW. Okay, and if you've got MindHub, you can also complete it on MindHub and get tested as you go along, so it's much better for you. All right, so make sure you get those completed, and you also want to achieve 100 pips in your demo account. When you've done those things, your upline will be able to add you to the intermediate group. Okay, so when you've joined the intermediate group, you're going to see us. We do daily calls, what we call our daily bread, where we go through trade ideas, trade live. We also share trade ideas. We have banter. It's all good. It's all fun in the group chat. So yeah, you definitely want to get involved in that if you can. Okay. So that's, yes, so NFP is going to be coming out 1:30 p.m. London time, 8:30 a.m. EST time, and 2:30 CST, 2:30 p.m. CET time. Wow, guys, thank you so much for helping me do the time zone conversion, because I was really struggling. Okay, I think I've answered everyone's questions. So with that, hope you have a fantastic evening and afternoon. And yeah, speak to you all soon. Take care. Bye.